Let's move our attention back to where the markets are trading right now. The Dow now below that 30,000 level after it reached a new high yesterday. It is down about 178 points right now. The NASDAQ, the only one in the green, up about 16. Let's bring in Scott Helfstein. He is Proshares Executive Director of Thematic Investing. And Scott, it's good to talk to you today. We can talk about more on what you're focused on in terms of investment themes, but I'm just curious to get your take on this 30,000 level we hit yesterday. Certainly a significant marker, but what really does that mean from an investor standpoint as we look to year end?
I think investors are really faced with a difficult decision here as to whether they want to position themselves for a reopening trade as the vaccine comes out, or whether they want to remain in their defensive growth positions. And we know that generals tend to prepare to fight the last war. And, in a lot of ways, I think investors might be doing the same thing. And if we think about defensive stocks of the past, they tend to be things like wireline, telecom, and they tend to be things like utilities, which offer stable cash flow, but generally don't grow. And the stocks that really move the market and that got us to this 30,000 point, the Apples, the Microsofts, the companies that have been so powerful and so strong in this economic drawdown and throughout the pandemic, are also the same stocks that grow when times are really good. And so we might be setting up a little bit of a false dichotomy for people. So, I think the 30,000 number is kind of one of those emotional hallmarks for many. But what it really reflects is that, this year there's been a pretty wide dispersion in the markets between winners and losers under the hood, winning sectors, losing sectors, winning stocks, losing stocks. And that, the market's been driven by this powerful force of who can deliver earnings during the pandemic.
Even as the market looks past the vaccine sort of coming to market, we did get another set of data today that seems to point to slowing momentum in the economic recovery. 778,000 new workers filing for those initial unemployment claims at a time when we've seen record infection rates across the country. Do you think investors are overlooking the risk that comes with this? Sure, the vaccine can come to market in a few months, but we're still looking at potential restrictions here.
Markets do climb a wall of worry. That's a historic pattern. We have looked across tremendous weakness, both across the economy and in company fundamentals this year. And I think investors, continue to remain hopeful. But I think you are absolutely correct that there is a patch of weakness, the lack of stimulus, of another round of stimulus out of Washington, and the decision to potentially limit some of the lending programs out of the Fed at a time where we are going into the holiday season, we are seeing case rates rise, does suggest we could be in for a bumpy few months. That said, a lot of the forecasts that are out there focus on second quarter, third quarter, and fourth quarter growth. So really a reopening that's both seasonal and vaccine related. So we do think that there is some potential for near-term weakness, but nonetheless, coming out of recessions, the markets tend to move up.
Hey, Scott, Brian Chung here. So you were mentioning the trade for when the economy reopens. What types of sectors are you looking at? I know telemedicine to plant-based food is apparently maybe on the menu for those types of trades.
So telemedicine is one that's really interesting. And this is the ability to see doctors virtually from your couch or wherever else you might be. And it's ironic because the technology has been there for so long. And most of the constraints were really around policy and things like whether insurance companies would reimburse people for telehealth appointments and how Medicare and Medicaid would treat them. But if we think about going forward, why would somebody sit in a doctor's office in a waiting room in flu season if they don't have to? And so many of the trends that we've seen accelerate through COVID are really reflective of, we think, meaningful permanent shifts. And so telemedicine, for example, a company like Teladoc, which saw their appointments go up in the quarter 200%, 206%. They saw their revenue grow by 100%. We think that that's something that's relatively sticky and permanent. And so that's true across a number of the trends from 2020.
Scott Helfstein, ProShares Executive Director of Thematic Investing. Appreciate your time today.
Thank you.